What's up, everyone? All right, so in today's episode, I'm going to review my day trading performance from 2024. The goal of this episode is not just to brag about how much money I've made. My purpose here is to share with you the type of stocks I made the most money on so you know exactly what to focus on in the days, the weeks, and the months ahead. We're at the beginning of a brand new year, and the last 3 months of 2024 were the best months of the year. So that means we ended the year with strength, and we're rolling that right in here, hoping for a strong start to 2025. Now, I'd like to begin this episode with a note on transparency. I'm going to tell you right now that I'm not the most profitable trader out there. In fact, there's only one person in the entire world who could claim the title of the most profitable, and there's only one trader in the world who could claim the title of the biggest loser, and everyone else is somewhere in the middle. So there are probably traders out there who made more than I made all year in just one day, maybe in just one trade. And I have a lot of respect for them. That's awesome. That's not where I'm at. What I will do is I will have my 2024 year, my entire trading profits, audited by an independent third-party CPA, and when that audit is complete, I will have that posted on my website so you can see. In the meantime, in this episode, I will share with you my broker statements so you can see the amount of money I began the year with and how much I have in total profit on the year. It was a good year. I made more than $2 million in gross profit, and I began the year with just over $100,000 in my trading account. Now, this is all part of my small account challenge that began on January 1st, 2017 with just $583. $583 in my account, and I've grown that now to well over $10 million. So every couple months, I'll take money out of my account, I drop the balance back down. And so when I began 2024, I had a little over $100,000 in my account, a relatively small balance, and I'm really impressed with the rate of return that I was able to achieve this year. In fact, this was my best year of trading since 2021. And the majority of the profit came from the second half of the year, just the last 6 months, which makes me think that if we had a full year like the last 6 months, this could have actually become a record-breaking year, which makes me wonder what 2025 has in store for us. Could 2025 be a record-breaking year? I don't know. Just maybe. Well, we'll just have to wait and see, but so far we're off to a strong start, and the market certainly is really high. Now, for those of you guys who are watching this episode, I'm going to give you a link. It'll be pinned to the top of the comments and in the description where you can learn more about the next steps to getting started if you want to learn to trade the strategy that I trade every single day. On that page, you'll see a link for either one of my free classes, which will teach you the ins and outs of my strategy, or a link for a 2-week trial where you can actually watch over my shoulder while I'm trading for 2 weeks to see whether or not my strategy is a good fit for you. All right, so without any further delay, let's go ahead and jump onto the screen share and start breaking down 2024. All right, so I'm just going to start on this window here. This is my actual Lightspeed brokerage account. When I log into Lightspeed, the back end, I can see daily summary, month to date, year to date, et cetera, et cetera. So this is the year to date for 2024, and it shows you on January 1st, my start of month equity was $110,000 right there. I finished the year with $1.4 million in the account, but I took out just under $600,000. So the gross profit was about $2.1 million. And you could see this $289,000, $290,000 withdrawal in July, and then I had another one in September. And then these are deposits into my account. I'm not really sure. These might be like interest or something. I don't really know exactly what these are, but these are kind of small deposits that go into my account. So anyways, I just wanted to show you this because this is the actual login from Lightspeed. I just don't want to scroll up because then I'll show you my account number, which is in the top corner. But this gives you sort of the report of the profit each month. So, all right, so that's that. Now, over at warriortrading.com, if you go down to the footer, you can see my broker statements going back to 2017, which is when I started that small account challenge. So you could look at any of these years to see, how I did. So 2024 broker statements are posted. December is now live here. So this was the best month of the year, $574,000 gross profit. Started the month with 883,000, and I mean, just kind of like unreal how strong the market was. So That was December. And now let's look at TraderView. So this is the software that I really like using for doing my analytics and stuff like that. I'm not an affiliate. If you want to use them, use them. If you don't. It doesn't matter. It doesn't make me any money if you use them. But I do think it's good software. I mean, I've been using it since 2016. So I really like it. I've got that many years of trading data all in this. And I look at that data all the time, especially the more recent data, to help me understand what's working and what's not working and where I need to make adjustments. We'll look at a couple of those spots this year. So this is my performance by month of the year. And this is just with one filter applied, which is, we're just looking at 2024. So last 12 months, January 1st through December 31st. So you can see that the year was kind of slow to start. In fact, the first half of the year was relatively slow. And then July, things really picked up. So what happened in July? Well, there was a catalyst. The event that happened in July was Roaring Kitty came back. So that got July off to a really hot start with GameStop going crazy and several other meme stocks going crazy. And that brought traders back into the market. Then what also happened in July, Biden stepped down. Or he decided not to, I don't know what you call it. Anyways, he stepped down from running for presidency, and Kamala Harris stepped in. So that gave the signal that the Democrats were crazy disorganized, not good at all. And so now, all of a sudden, people started to price in the possibility of a conservative Republican coming back into office, which is good for the stock market. So at least in the short term. So less regulation, especially on the big banks, big hedge funds, stuff like that. So now all of a sudden, you get a little bit of a pullback here, but still July, August, September, great. October, finish line for the election, things pick up. November, crazy good. And then December was just an amazing month. So if I look at my last several years, what's kind of interesting here was that all of a sudden, 2024 became my third best year of my career. I didn't see that coming. 2020 was the peak. 2021 was great. 2022 was slow. The bear market began, and 2023 was my low point. And then 2024, I'm up 6 times what I made last year. I mean, I had like a 2-week stretch where I made as much as I made all of last year. I had, a couple of $100,000 days, individual days where I made a third of what I made all of last year. Now, someone else is probably looking at this and being like, Ross, I made that much, 5 million in a single day. This is like small numbers. So one thing that I'll tell you is that my biggest flaw is in trading. I would say my biggest flaw is that I am risk averse. And I think you guys are probably going to be like, that's an outrageous statement. There's no way, because look at how much risk you take day trading. But I really don't like taking a lot of risk. And the thing with day trading for me is that because I have an edge, I have a system, I have a process that I follow every single day, I don't feel like I'm taking a lot of risk. I mean, certainly I'll have individual trades that I lose on, and I might have individual days where I'm red, but in totality, big picture, I'm green, month after month after month, year after year after year. So I don't feel like I'm taking a lot of risk being being a really active day trader. But the area where it's holding me back is when I see traders out there who look at a stock and are like, I think this is going to be up 6 months from now, and I'm going to throw $1 million on it. And then it goes up and they make 2 or 3 million on that single trade. That doesn't happen to me, and so I think that on the one hand, my fear of taking the loss that would come with taking such a big position is holding me back a little bit. But the good news for you is that it perpetually keeps me in the mindset of essentially trading in sort of like a small account or sort of like day-to-day trading to produce consistent returns. And I think that that's really helpful for those of you guys who tune into my daily broadcast, because each day is like the same goal, like get a little profit, get green, shut it down, and walk away. Whereas traders that are really big money traders can get a little complacent. They may not show up every day, or they show up, but they, take huge positions and they're green, but they don't take it off the table. They just kind of let it ride. And then it maybe goes from a winner to a loser. And so, that's kind of a tricky way to learn if you're a beginner. it would be like trying to learn from Warren Buffett. I mean, what works for him is very unique to his situation, and it's not likely to work the same for someone who's starting at a very different level with like $1,000 or something. So anyways, so 2024 was definitely a nice bounce back. And yeah, like I said, given the fact that the majority of this profit came from July through December, if we ran the report just exactly like that, so from July 1st through December, we'll just go through here, December. Let's just see how much I made in that stretch of the year. So in those 6 months, I locked up 1.8 million in gross profit. So, that could have been a $3.6 million year if it had held at that level. And so if this does hold this level for the next 6 months, next 12 months, yeah, it's not unthinkable that this could be a $3 million year. It could even be higher than that if we see, continued action, which therefore gives me the confidence to take a little bit bigger share size on my trades. But I'm still going to be in here focusing on base hit, base hit, base hit. The biggest difference is that if I'm taking 30,000 shares, a base hit of 30 cents is $9,000. I do 10 base hits like that in a day, I'm up 90 grand, right? You're a beginner trader, you're doing those same base hits with 300 shares, it's $90. So you might be up 900 or whatever, the case may be if you do 10 of those. But I'm just trading at a level where I'm taking bigger size, but I'm essentially still trading the exact same way. And that's kind of what does hold me back a little bit. But nonetheless, this is where I'm at. And while other people are at a level that, they're taking more risk and they're getting paid for it, they also have to live with the downside that comes when those risks don't pay off. And so, we're all at our own place. It's all relative. Okay, so now what I like to do here is kind of get dialed in on exactly the type of stocks that I made the most money on, because I think this is what's going to be the most helpful for you guys in the days, weeks, and months ahead. So we're going to go to detailed, and we're going to go down here. And by the way, this includes some profit from my Thinkorswim small account challenge that I did. So this is a little bit higher than the profit that's on my Lightspeed broker statements, but it's just because of that Thinkorswim challenge. Okay, so one thing that is noteworthy from this year is that my accuracy was 65%, which is a little lower than normal. But what's interesting is look at this profit loss ratio. Average winners $900, average losers $600. So that's a good profit loss ratio. Let's just look for, just for the sake of it for a second, let's look at 2020. Best year of all time, 2020 for me. And my profit loss ratio was $1,600 winner, $1,500 loser, 1-to-1. Accuracy was 72%. Now, I made more money. There's no question about that. It was a better year. But I find it interesting that I had a worse profit to loss ratio. If we look at 2021, my average winners were bigger, my average losers were bigger than my average winners. $2,500 average loser, $2,200 average winner, and accuracy was 66%. So that was a worse year, and yet I made more money. And the reason I made more money was because my average daily volume was quite high. I was trading high volume the whole year. 2022, things started to slow down with interest rates spiking up. That was a tough year for me. Inverted profit loss ratio. Average winners 800, average losers 1,000. Accuracy 69%, but average daily volume dropped down to 264,000 shares a day. Now we'll go to 2023, which was my low point. 2023, average volume went down to 126,000 shares a day. Accuracy was 67%. $554 winners, $622 losers, inverted profit loss ratio. And then all of a sudden we go to 2024. And again, we got to remember the first half was slower, but nonetheless, 2024 back to $300,000. Back to 300,000 shares of daily volume and this healthier profit loss ratio. So if I was able to get my average daily volume up to 600,000 shares, would that have brought me up to 4 million? In theory, yes, the math would check out on that. However, there is a little bit of a problem, which is that if you take bigger share size, it's a little harder to move in and out of the market. And so if you take a 50,000 share position, you may not be able to get out break even, right? That's a huge position. So some people say, Ross, why did you choose to reduce your share size from 600,000 shares a day in 2020 all the way down to 126,000 shares in 2023? That was your problem, you dummy. You reduced your share size. You should have just kept it the same. You would have been fine. Wrong. That's the wrong answer. And I'll tell you why. This is the double whammy of a cold market. When the market gets colder, there are fewer A quality setups. And because there's less big momentum, there are fewer traders that are even trading in the market. And so volume declines. So now there's less setups and there's less volume across the board, which means even if you wanted to take big size, because you have fewer setups each day, to trade the same number of shares, you'd have to trade each of those setups with probably 4 times the volume as during a hot market, except it's cold and there's not enough volume to support getting in and out of positions that big. So the only thing you really can, you can choose to continue to swing hard at the fences on every trade and you're going to get smoked. You're going to take big losses. And that's what happens to all of us. And then we realize, okay, what do I have to do? I have to size down. And then we take another loss. It's like, I have to size down more. And we get to a point where it's like, I have no other choice but to size down in order to survive. I want to get through this bear market and get to the other side. Now, there's a lot of traders who didn't make it through the bear market. That's the reality. There's a lot of traders who made really good money in 2020 and 2021. And then when the interest rates jacked up in 2022 with the Federal Reserve, all of a sudden, unprecedented hike in interest rates, inflation, it's not transitory. It is here to stay. We need to do something about it. That sent the market into a spiral. We got this big bear market. Bonds went down, stocks went down, everything went down in 2022. 2023, things started to recover. And then 2024, things really picked up. So now we're picking back up. And it's only the traders who were able to batten down the hatches and keep themselves just treading water alive to survive through the bear market who are now able to reap the rewards. So now I'm back on the other side and boom, the market's picking back up and I'm able to book some really nice profits, which is great. But it just goes to show that there was no other choice but to size down. I had to size down. So now I'm able to size back up. And if we just ran this report for the sort of second half of the year, I'm back at about 450,000 shares average per day. So if I could increase my average share size by another 50% from where I'm at basically for these last 6 months, then that would help. Is that possible? I think that is possible. It may not be possible every day, but I think it's not unreasonable to set the intention of increasing my average share size. So how would I go about doing that? Well, let's go ahead and log into my trading platform. Let's see. All right, so hang on one second. So as I get logged in here, I'm going to show you what I would do to change this. All right, so I'm going to put this on the screen share right here. Okay, so you can see this is my trading software right here that I'm using every single day. And you can see my default order size is 2,500 shares. Well, go in right here. I go into log in and I could change that right now. I could change it to 5,000 shares, just like that. We're done. That's a 100% increase. So maybe I want to go to 4,000 shares, make it a little more moderate, right? Now, the only thing is 2,500, you press it 4 times, you've got 10,000 shares. It's easy to do the math. You start doing weird numbers like 3,500, you press it 4 or 5 times, you're going to get to, weird share sizes, which is just, it's easier to keep it round numbers. So 4,000 is fine. 5,000 is a little easier. So maybe I just move it up to 5,000 shares, starter position. So now three orders, buy is 15,000 instead of 7,500. So that would be kind of the simplest thing to do, just to change my default hotkeys and my default order entry window to be bigger size. So on every trade I take, I just start, kind of pushing the limit there, taking a little bit more risk, taking a little bit more size. Same trades, just bigger positions. That's probably going to be the biggest, that'll be the way that I make the most profit this year or have the most improvement year over year is same trades, bigger share size. So, all right, so now we've looked kind of high level at these metrics. So we've got my total gain. We'll go back to year to date or last 12 months. So we've got the total gain. We've got the biggest winner. The Biggest Loser, I'm nothing real. I mean, none of these are outrageous. They're not historically significant. It's not my biggest winner of all time. It's not my biggest loser of all time. Average hold time about 4 minutes. These are relatively short trades. Of course, some of them are seconds long, breakout trades. Others might be longer. And now let's go down to sort of the analytics here of how this profit is distributed. So across days of the week, we seem to be getting the most on Wednesday. And this speaks to psychology. I start Monday, break the ice, build a cushion. If I have a good day on Monday, I take a little more risk on Tuesday. If a good day Tuesday, I take a little more risk on Wednesday. After a good day Wednesday, I start to size down a little bit going towards the end of the week and finish up Friday with taking risk off. Now, this is something a trader who's trying to produce consistent weekly income would do. This is not something someone who's super rich and doesn't really care if they have a green week would do. If you've got that mindset of, oh, I've got so much money, I don't care, who cares that it's Monday? You'll just take a lot of risk. You'll take a lot of risk on Friday. Who cares that it's Friday? But I'm in the mindset of still scarcity of, when I started trading, I didn't have a lot of money. I'm thinking about being consistent. Green day, green day, green day. I want to be green each day. I want to be green each week. I want to be green each month. And actually, I'll note that December was my first no red month of the entire year. So a no red month, green every single day for the month of December. And it's okay to have red days. It just so happens that I had red days in November, but I had 2 red days in November at the beginning, at the end, and actually 3 red days. It doesn't matter to have a red day. It just speaks to the fact that the market was really strong there in December. So distribution by day of the week, speaks more to psychology. It could be the case that I'm leaving some money on the table by not being more aggressive on Mondays and Tuesdays, but I trade this way because this breeds self-confidence. Being green day after day, being green week after week, being green month after month makes me feel really confident, makes me feel like I'm on the top of my game. And that confidence that I carry from week to week to week is really important. When you get yourself into a downward spiral, you start having back-to-back red days, back-to-back red weeks, back-to-back red months, back-to-back red years, things can unwind. And it can be really hard mentally to put that behind you and just focus on locking up base hits. Now, I'll tell you, if you're in a place where you've already had that spiral, the best way to break that cycle is to focus on accuracy. Focus on A, quality setups. Trade the best, leave the rest. Now, if you're tuning into my broadcasts each day, you're going to hear me very clearly articulating, this is the type of setup I really like. This is a stock that, for me, meets my 5 criteria of stock selection. It's an A quality setup. So, if you're doing a 2-week trial or you're already a member, you know that. But if you're not already doing either of those, then you could check out the links down below in the description. So performance by week. Now, performance by hour of the day. I did see a request to break this down by minute. I can't break it down by minute, but I can break it down by 15-minute window. But we'll start with hour first. So performance by hour of the day is predominantly right now 6 a.m. to 10 a.m. So beginning at 6 a.m., ending at 10 a.m. And literally all of this was for nothing. So I took a lot of trades between 10 a.m. and 11 a.m. You could see them right here. And what did I get for it? I got nothing. So what should I do this year? Well, I could buy myself back time, which we, of course, have a limited quantity of, and I could stop each day right there at 10 a.m. And that's it. I do my recap at 10 a.m., and I'm done. Now, I'll have some FOMO because there are days where we have stocks that squeeze at 11, 12, 1 or 2 in the afternoon. But my profit from the last year has not shown that I'm able to trade during that window profitably. I'm not sure. I mean, I could speculate. There's some reasons why, but without getting in too deep of a tangent on that, one alternative is to focus on getting better during this time range, and the other is just to stop trading that range because I don't do well. I think, given where I'm at in my career, I'm pretty content to get more time back in my day and to make a more conscientious decision that I'm only going to stay later on a day when we have some really strong momentum and it's just continuing to go higher. So like a parabolic move that begins at 8 and keeps going, I'll keep trading. But to stop at 10 and then just sit and wait for something fresh to show up, I'm not sure if that's going to be a good idea for me. So that's by hour of the day. By 30-minute window of the day, you can see I had a couple trades at 4 a.m. That was on GameStop. I had 6:30 to 7 a.m. beginning, and then kind of wrapping up between 9:30 and 10 a.m. That's the 9:30 to 10 a.m. window, and then that's later in the day. And then down to 15-minute window, you'll see that it's kind of interesting because a lot of my trades are going to be consolidated right around the top and the bottom of the hour, 8:30. Why? That's when we have breaking news. 9 a.m., breaking news. So 8:45, 7:15, 8:15, the 7:45. We don't have as much news that comes out at 7:45. So the windows that I'm making the most are top and bottom of the hour, and that corresponds to the fact that I'm trading breaking news. And that's also the problem with trying to trade past the 9:30 opening bell. You don't get fresh breaking news. I mean, sometimes you do, but usually you don't. Whereas every day we have breaking news that comes out in the pre-market session. So if companies start putting out news headlines at different times of the day, that would be a reason for me to consider making a change. But until that happens, there's not really any point. So, all right, so that's performance by time of day. Performance by month, we already looked at that. This is not as significant. So now let's look at price and volume. So I made the most money on stocks priced between 2 and 10. So 2 and 5, 5 and 10, and then 10 and 20 to a lesser extent. So keeping the range of my sweet spot between 2 and 20 makes sense. Stocks under $2 made $53,000 in profit. But I had a lot of trades there, and I don't have a lot to show for it. I also have a decent number of trades on stocks between 20 and 50, and not a lot to show for that either. Stocks above 50, not many trades, not much profit. So, there's no reason to say, oh, I shouldn't trade anything below $2. I don't need to, say like that 53,000 is not worth it to me. I mean, that's still good money. But on the other hand, could be an opportunity cost. You spend your time messing around with these lower price stocks, and then you miss a trade in the $2 to $5 range. That's going to cost you more than this would have made you, the opportunity cost, right? So maybe it's not a bad idea just to say, stick with this range of 2 to 20, which is where you do the best. And if it's outside that, leave it alone. But what about a stock that's $1.98? Well, I guess we should probably trade it. What about a stock that's $20.02? Well, I don't know, right? So it doesn't have to be a strict rule of thumb or a set in stone rule, but it's just a guideline. Performance by volume traded. I made more when I traded more volume. That's logical. However, if we had, this goes up to 20,000 shares. If you had this go up to like 1 million shares, you would see a place of diminishing returns. Well, of course, I didn't trade 1 million shares of anything, but you would still see a place where you get diminishing returns. I made the most on stocks that had an in-trade price range of between 50 cents and $5 a share. This is really where I did. Oh, you know what? So this actually reminds me. I talked to TraderView about this. This is not totaling up to the same amount of profit that I made. You can see right here, it's only $115,000. They were aware that there's an issue there. They gave me the reason, and I can't remember what it was. Anyway, so actually that's not relevant. But it is noteworthy that I lost some money on stocks with huge ranges. So sometimes a stock like NUKK that has goes up 50 points and then drops down, those can be too volatile. And stocks that have really tiny ranges, it's hard to make good money on those. Profitability by instrument. So some of the stocks I made the most money on, ATNF, BTCT, PFRX, PRTG, KXIN, ALBT, MYSZ. There is a little bit of a theme here, which is the stocks I made the most money on. The sectors I did well on, biotech and pharmaceutical, number one. Number two, stocks that had some exposure to crypto. I had some good trades in that area. Stocks that had some exposure to Trump presidency, I had some good wins in that area. And stocks that had some exposure to defense, with the just political climate and everything else, I did well on some of those. But biotech led the way. So biotech stocks have been the biggest winner. Performance, I do better when stocks have higher volume. Sometimes I'll trade at the beginning of the move when it has light volume and I don't know. I think maybe I'm the first one to see the stock with news and I'm like, okay, this is good. But sometimes I'm wrong and then that doesn't work out so well. So it's better if it has more volume. I do better when stocks are up on the day, 10%, that makes sense. I do better when they're gapping up. Stocks that gap up are generally going to be what I'm trading. I do well when the stock is trading on 5 times its 50-day average in terms of volume, 5 times higher volume than average. Performance by instruments prior day relative volume is a little bit more dispersed though, and that's because I do make money on continuation. So this down here is when a stock the prior day had 5 times relative volume. So if the stock had 5 times higher volume yesterday and today has 5 times higher volume, that's 50-day average, and it did yesterday as well, then that tells us that this stock basically had 0 volume and then these last 2 days has huge volume. It's got news. It's some type of continuation setup. So market behavior, not as much we can learn from this because the market trades sort of range bound most days. Win-loss expectation was green 65% of the time. Liquidity, cumulative P&L, you could see here, had some drawdowns, but they were minimal. Biggest drawdown of the year was $28,000. On a year where I made $2 million, that's really good. $28,000 was the biggest drawdown. And in the last part of the year, my biggest drawdowns were like 6 and 7,000, 10,000. That's very respectable. I can feel really good about that. That's because of discipline. I kept my risk in check. So I feel good about that. Now, if we go up here to win versus loss days, you'll see that I had a lot more winning days than I had losing days, which is good. My accuracy on winning days, 67%. Accuracy on losing days, 47%. So I've still got to get better at quickly identifying that today is going to be a losing day and that I need to stop trading as early as possible on those days so I don't dig the hole deeper than it needs to be. And that also, on the other hand, means looking at the market and asking, is today a base hit day? Well, is today a red day? Is today going to be a green day? And if it's going to be a red day, stop it ASAP. As soon as I realize my accuracy is lower than 50%, stop trading. Now, if you have 2 trades and one's a winner, one's a loser, you're at 50%. If you have 2 trades and they're both losers, you're at 0%. And it's still early in the day, so maybe you don't stop there. But you got to keep an eye on it, especially if your first trade is a loser, because that's telling you you're off to a bad start. But something that I want to try to continue to work on is asking myself, is it going to be a red day or a green day? And if it's going to be a red day, stop. If it's going to be a green day, is it a base hit day or is it a home run type of day? Now, I still focus on chipping away at base hits, but if it's a type of day that has the potential to be like a top 10 day of the year, those are the days I especially need to dig deep and trade a bigger size and be more aggressive. So that's going to help me. Basically, that's the saying of, 20% of the days produce 80% of the profits, where, it only takes, 10 $100,000 days in the entire year to have a great year, $1 million year. So I think this past year I had maybe 4 days where I was up over $100,000. So, would I be able to, on those days where I was up over 100 grand, I had one in December here. Could I have recognized that day had big potential sooner and been more aggressive earlier? I don't know, but maybe. And if I can, that would be something I should definitely pay attention to. I had a couple, I think I had 2 $100,000 days in November. No, let's see. No, I didn't have, I had one in November. So one in December, one in November. And then October, did I have one? I had one in October. So I think that's 3 $100,000 days. That was October. September, I don't think I had any. No, I didn't. September was a little bit of a slower month. August, no, I didn't have any. It was still a good month, but, and then July was the beginning of the hot streak and I didn't have any there either. So, in July, I had 2 days that were $40,000 days, but the month was mostly $5,000 to $10,000 base hit days. 10,000, 10, 10, 10. That's a $45,000 week. Next week, 14, 3,000, 12, 1,600, 3,000, 9,000, $30,000 week. 20, $30,000 weeks, and then a couple of bigger green days, and all of a sudden it's like, wow, okay, this is really picking up. So yeah, the win versus loss days, and then comparing. So that was actually the comparison that I wanted to do, was the win versus loss days, and just to remember that on days that to identify red days as soon as possible so I can stop trading, but on the other hand, identify the days that have the potential to be top 10 days sooner, so that whole day I can trade bigger size and try to squeeze as much as I can out of those days. Because there's only going to be a few of them each year that are like your best days of the year. So at what point do you know, like, this is becoming the best day, or this has the potential to be the best day? I think it's going to start with a look at the scanners and, being like, we're in a hot market right now. Scanners are looking good this morning. And first couple trades, immediately you're above your daily goal. Okay, wow. This is good. Great action. Increase share size. Be more aggressive. Now, some people will say, you hit your daily goal, walk away. But that's not going to be me. I've never been that way. You don't want to cap your winners. You want to cap your downside, but not your upside. So you can reduce your share size after hitting your daily goal, and that's more conservative, and that's okay. And I will do that at times, depending on when I hit my goal, day of the week, month of the year, cushion on the year, things like that. There are time of day. There are scenarios where I hit goal and I size down, but there's other times I need to be thinking about staying aggressive and trying to really squeeze as much as I can out of the strength that's in the market. So, yeah. And just like asking myself, is this the type of day that I should be pushing it? If I'm red, does it really matter? If I'm down a couple $1,000, like, don't go chasing to try to get back to flat and then find yourself down 5 times your max loss. Just be okay with small red days. Small red days are not a big deal. If you can keep your days, I mean, think about this. I don't know how many red days you had last year, but my average red day last year was $5,400 in the red. $5,400 in the red last year. Those are average losing days. And I had 24 of them. So that's about 2 red days a month, right? 12 days, 12 months out of the year. So I'm pretty okay with that, to be honest. I mean, that's pretty darn solid for me. That's going to be a lot better than previous years. And we could just compare that. But whatever your number is, if you want to make that number a little smaller, then you've got to walk away sooner. And you've got to size down sooner. I had 47 red days in 2023. They were smaller, but I had more of them. 2022, let's look at 2022. So 2022, I had 38 losing days. Average loss, though, was 10,000. 2021, now this is not going to be pretty. So 2021, I had 48 losing days, $30,000 average losing day. Oh my gosh, that was so some of those were brutal too. That was when I had my biggest red day of my career. 2020, I had 44 losing days. So I'm actually kind of impressed that last year I had the fewest losing days in 6 years of trading. So maybe longer. I mean, at this point, let's just check it all. Did I have the fewest losing days last year? That was 18. Let's look at 17. That was 17. So 16, this is our last hope, because that's the last year that I have in here. So 2016, 48 losing days. Wow. So that's something I can feel good about. That was the only record that I set last year, but that was a record, the fewest losing days of an entire year. But if you recall, there was something I did there was a very specific thing that I did in June. Do you remember? In June of last year, I had this epiphany that after these 2 red days here, I was asking myself, how can and it was this one that really got me frustrated. But I was asking myself, how can I identify it's going to be a red day sooner? And that's when I realized that on my red days, I trade with very poor accuracy. And so that was when I set into motion this new technique for risk management where I wouldn't take full size until I was first up 20 cents per share in profit. So I'll pull up that slide deck just so you can see what that looks like. And that was really a game changer. I actually proceeded to have, I think it was a 47-day green streak through the month of July. Oh, so actually July might have been a no red month also, come to think of it. But anyways, that doesn't really matter. So July, oh wow, July and August were both no red months. Yeah, so man, that's really solid. I mean, I'm surprising myself. I guess I forgot, but yeah, that was really solid. So July, August, and then 2 red days in September, October, November. Yeah, that was really good. And so that really does come back to the fact that I made a very conscientious, affirmative decision to do something different starting in June. That's not just a coincidence. I mean, yes, the market picked back up, and so I'm super grateful for that. That was out of my control. I mean, the market picked back up, and I'm grateful for that. But I also made this decision. So the idea here was, I'll just make this a little bit over on this side. So first, maximize share size. Oh, this is actually different. So that was just scaling up. So as I was editing this video and getting it ready to upload, I realized that I didn't set for you what you can expect of me from 2025. So although I haven't changed my daily goal, I'm still focusing on a $5,000 daily goal for 2025. I am hoping that I'm able to far exceed that as I did in 2024. So something that I'm thinking about a little bit is when I'm thinking about daily goals, thinking about my performance over the last 30 days, what have I been averaging? And right now I've been averaging about $27,000 per day over the last 30 days, which is phenomenal. So today, for example, was a day where I'm up about 4,800, and it's a green day and I can't complain, but I recognized pretty early that this had a chance of being a red day. But once I got a little bit of a cushion, I was like, okay, it's a green day, but it's only a base hit day, not a day to swing for the fences or step up. So I said, even though, yeah, my daily average has been like 27,000 a day, it's not gonna happen today, and trying to strive to hit that is probably actually gonna result in me losing what I do have on the day. So, I'm thinking about daily goals a little bit in terms of what I've been averaging, and also max loss in terms of not wanting to lose more than I can make in one day in that current market. So that means sometimes when the market's slow, tightening up my max loss, and other times when the market's really hot, letting myself have a slightly bigger max loss. So that was the first thing. Now, the second thing that I wanted to say is that you can expect a daily recap from me every single day in 2025. That's what I did through all of 2024, daily recaps. So you can tune in and expect to see those at least one recap per day. Now, typically, I think my plan right now is most days I'll be done by about 10 a.m. Eastern Standard Time. Some days I'll trade a little longer, but most days I'll record my recap as soon as I finish trading, and then I'll get it uploaded so you guys can watch it. So I hope you're subscribed to the channel that way, and press the notification bell. That way you'll get the alert when a new upload goes live. And usually when I first upload, that's when I'm watching the comments. So if you have questions and you post it right away, that's when you're most likely to get a response from me. All right, so by now I think I've navigated my way through the slide deck, so let's go ahead and jump back in. So that was going to be this turning point right here. So I realized my accuracy on red days was only 46%, but on green days it was closer to 70%. So is there a way I could know sooner that today's going to be a red day so I could stop trading? Typical green days, I was green big on the first trade, but the typical red days is I was going deep red, and then I would increase size to try to recoup those losses, and the loss would get bigger and bigger. So the change I proposed was that I would cap my share size at 1/4 of full size until I was up 20 cents per share in profit. And only then, once I'm up to 20 cents per share in profit, scale up to full size. So that means if I go red, I'm only trading with 1/4 of full size. So my loss is 1/4 of full size. And that, therefore, I'm not likely to hit max loss. I can continue trading until either I get myself back to flat or I get to my first profit target and then I size up. So some days I would kind of struggle going red slightly, green slightly before pulling away. Some days I would kind of go red and I'd just be like, okay, I have to stop. But the losses were more manageable because I was trading with quarter size. Now, the only thing that's been a little bit of an issue here is that I have increased my share size across the board. So quarter size is now a bigger dollar amount than it was 8 months ago. And so I just have to be aware of that the red days will be a little bit bigger right now. And so the red day that I had in November, $6,000, $11,000, $9,000, those are going to happen if I'm trading with bigger size. And so that's okay. It's okay if the dollar amount's a little bit bigger, as long as I can try to keep the frequency of the red days in check and still use this technique to manage my risk. So at this point, I would say the 5 criteria of stock selection, unchanged for the year ahead. I'm going to continue to proceed with that as it's been. You can check out other episodes I've done on stock selection to learn more about that. So no change there. Still focusing on biotech stocks, still focusing on lower float stocks, and still trading momentum. High a day momentum, stocks squeezing up, making new highs, jumping on micro pullbacks, and riding those moves to the next leg up. And then once we get a big kind of, rejection, usually I'll be done trading it and move on to the next stock. So if we continue to see the type of momentum we've had for the last 6 months, I think it's going to be a really good year in 2025. So if you guys who are tuning in want to learn more about my strategy, you can come over to warriortrading.com. You can check out the Getting Started page. The link is in the description. And there you will see the option to watch my free intro to day trading course. Or you could do a 2-week trial here at Warrior Trading. So I want to thank you guys for tuning in. I'll remind you as always, my results are not typical. Trading is risky. And so I want to encourage you to practice these new strategies that you're learning in a safe, simulated environment before you put real money on the line. So Warrior Pro members, those of you guys who are thinking about joining or who have already joined, as a Warrior Pro member, you'll have 90 days of access to a trading simulator so you can practice the new strategies you're learning in a safe environment. So thank you guys as always for tuning in, and I will see you back here for the next upload real soon.